Welcome to Trader TV, your insight into trading for professional investors. I'm Dan Barnes. Joining me today is Anish Puaar, market structure analyst at Rosenblatt Securities. And we're going to be discussing whether Amsterdam has really stolen the march on London. Anish, welcome back to the show.
Hi again, Dan.
So today we're going to talk about Amsterdam and London in the equity markets and potentially the way they might deviate. Obviously, I love any headline with Amsterdam and deviation in the title. Can you tell us, first of all, has London actually suffered a terminal loss of equity trading?
So London's lost its status as the home of pan-European share trading, but I don't think it's terminal and it may not be permanent. The issue itself goes back to the EU's MiFID rules in 2007, which made it possible for startup venues to compete with national stock exchanges for secondary trading. So this resulted in the launch of a lot of alternative platforms, which you also know as MTFs. Mm-hmm. The vast majority of those basically set up in London and decided to be regulated by the FCA. Yeah. So over the years, these platforms have grabbed about 20 to 30% of equity trading in various markets from the likes of the London Stock Exchange, Euronext, Deutsche Börse, Swiss Exchange, and all the rest of them. So the latest version of MiFID in 2018 introduced a rule that required EU shares to be traded on EU platforms. Yep. So obviously when Brexit hit, because there's no regulatory equivalence, these London MTFs can no longer offer trading in EU shares. Yeah. So as a result, the London MTFs set up basically parallel entities in the EU to now trade those EU shares while retaining the UK shares and more recently Swiss shares in London. So all of this data you see is effectively just that. It's nothing to do with the London Stock Exchange itself losing a share of listings, rather, it's just this kind of secondary activity that's moved to Amsterdam. So in terms of the impact on the UK, in terms of jobs and tax revenues, for instance, it's kind of minimal.
How do you see UK and European Union regulators potentially deviating from existing market rules?
Yeah, so far, the UK Treasury and the FCA have largely mirrored EU rules and in particular MiFID rules. We're now on to discussions about regulatory equivalence that will allow UK firms to do business with EU firms. And in my opinion, the chances of that seem to be diminishing day by day. Despite that, while the option of regulatory equivalence is still on the table, I don't think you'll see that much divergence between the EU and the UK. But one small area that's worth pointing out is the UK has cancelled the dark pool caps that were introduced in MiFID II that essentially set a limit on the share of dark pool trades that can occur on any one platform or on a market-wide basis. So the FCA thinks dark pools provide good results for friend investors, and so it's decided not to apply the caps kind of going forward. And that's fairly significant because the number of FTSE 100 and FTSE 250 stocks that fell under these caps is actually higher than most other European indices. So it's going to be interesting to see how dark trading in those indices evolves relative to the major EU indices. The removal of those caps is really just a minor tweak to UK market structure rules. And I think it's fairly well documented that the UK is going to carry out a broader capital markets review that will probably include more market structure measures. I think that's during the summer.
And then what do those dynamics mean for buy-side equity traders and brokers?
If you speak to buy-side traders, most of them will tell you that the politically driven migration of liquidity from London to Amsterdam hasn't really affected their trading or routing strategies much. That's really a testament to the brokers and the venues that have set up these new entities and enabled routing to them in a way that's fairly seamless and allows kind of business to carry on as it was before the impact of Brexit hit. So the industry has obviously been through this before. I think it was the summer of 2019 when Swiss stocks were banned from the MTFs and there was a kind of an overnight shift of liquidity. And actually my fear is that politicians see how well the industry can cope with these things and it can prompt them just to make further politically driven decisions that create a lot of work behind the scenes. But you've got to remember, these were kind of big bang migrations that happened from one day to the next. There was no smooth rollout or anything like that. And the industry handled that very well. But, all the while the industry has to handle these kind of shifts, What they're not doing is innovating and trying to grow business.
Yeah, no, absolutely. So that said then, are there any meaningful changes in order routing or trading strategies in the offing as a result of what we have seen over the last 6 months?
There could be a need to rethink certain strategies in the months and years ahead if the UK deviates significantly from Europe in terms of market structure rules. The UK could, for example, make it easier for banks to internalize flow, or it could take an even lighter touch approach to dark trading, going further than cancelling the caps. It could also impose less restrictions on things like periodic auctions. Those kind of things, I think, will become clearer once you see the MiFID II review, which is expected in Q4 this year. And there you could see it become actually easier to trade EU shares in London rather than in the EU. Now, of course, because of the MiFID II rules, EU firms won't be able to trade EU shares in London, but London has a chance to attract traders from other parts of the world and then could grab back some of that liquidity that's gone to other places. All of that is theoretical. We've got to see, A, what the UK decides to do in the summer, and B, what the EU decides to do as part of the MiFID II review later this year.
That's been great, Anish. Thanks so much.
Thanks a lot, Dan.
I'd like to thank Anish for his insights today, and of course you for watching. To catch up on our other episodes, or to subscribe to our newsletter, go to tradietv.net.